Welcome to Coffee from the Block from the House of Blockchain in Liechtenstein. My today's guest is Dr. Joachim Schwerin. He is Principal Economist of DG GROW of the European Commission. It's a great pleasure to have you here.
Thank you very much, Thomas. My pleasure to be here.
Joachim, tell us a little bit more about your work for the audience. What does a Principal Economist of DG GROW do?
A principal economist in the first place is indeed an economist with some experience, and I've been working for the last 21 years with the European Commission. I have a PhD in economics, in economic theory and history. And since my start at the Commission in 2001, I've been working, first of all, 10 years in the area of industrial and competition policy, where I have then been coordinating the interface between industrial and competition policy for merger cases, antitrust, state aid, etc. Then I went to the field of access to finance for small and medium-sized enterprises, where I've worked for the next 9 years, where I continued my work, but focused more and more on the digital aspects. So in my previous job working on industrial and competition policy, I was already involved in the bank rescue operations, for example, from the financial crisis, which is why I then came into the area of alternative finance that was emerging after the financial crisis, crowdfunding, fintechs, etc. And I made this into the focus of my work on SME access to finance, and have then, since the spring of last year, moved into a new area in DG GROW, which deals with the digital transformation of industry. And in the digital transformation of industry, I continue and deepen this work. I'm responsible for the token economy in Europe as regards the industrial ecosystems and SMEs. So for the development of use cases, but also education regarding blockchain applications in all the various fields, both in the financial and the real economy area. And in this function, I mainly analyze current developments in terms of innovation, how to turn innovation into practical use cases in the various contexts, but also what is the role of policy making and regulation in a very fast evolving area such as crypto.
Speaking of regulation, we know that in 2020, in September, the European Commission announced their draft of a market in crypto assets regulation and a DLT-MTF pilot regime. And it seems like that this was not the end, but a big milestone of a longer process.
Yes.
And I know that on a European level, you were thinking for a way longer time about regulation in that space. When did that start and what did the process look like? Because people are asking us in Liechtenstein what we did here in Liechtenstein. It seems like that you started way earlier than 2020.
We started way earlier, Thomas, and it was a long journey, I must say. It is a journey like all exciting journeys where at the beginning you do not know where you end. And also at this moment in time, obviously, we are far advanced, but we do not know precisely where it will go to, which is interesting. Now, the starting point is, in my opinion, really the financial crisis, because the financial crisis...
As with Bitcoin, actually.
And this is actually something which is a very interesting coincidence, because if you recall that in September 2008, we had the bankruptcy of Lehman Brothers, which is, in a sense, the key bottom line, I would say, from the subprime crisis in the US, which then had all the global repercussions. And 1 month later, the white paper of Bitcoin was published, and 3 months later, the Genesis block of Bitcoin. At that time, that is, of course, a mere coincidence. But you have it very often in history that the crisis of one big thing is the emergence of another thing. And this actually, at that time, of course, no one took notice of this white paper, but it led to a process which has influenced us increasingly. And I must say that in the first years in and after the financial crisis, we were in a defensive mode, just trying to stabilize the banking system, looking at how to tighten regulation in order to prevent further situations like this. But we were also increasingly looking into alternatives. You must know that 75% of enterprises in Europe, especially small and medium-sized enterprises, are financed through the banking system, which is much higher than in other parts of the world. And this is a source of huge risk, of course, if you have these instabilities, these systemic risks in the banking sector. And we were looking at what other ways could enterprises have to finance themselves. So we
mentioned crowdfunding already.
Indeed, we helped develop crowdfunding, alternative finance, which at the end of the day did not turn into this big alternative in terms of market size that probably people hoped for at this time, but it led to a completely different attitude towards regulation. And I will come to that in a second if you allow. So we really saw that finance could also emerge bottom up and not only top down, which actually is the historical origin of finance. I mean, this banking system that we have is not something that comes from Adam and Eve. It is something that emerged much later, and we now see it as normal, which of course it is not. And the innovation in alternative finance and crowdfunding then also led, what you of course know very well, to the fintech emergence, to the first use cases of blockchain, the cryptocurrencies, the ICO hype in 2017, etc. So this was already one trajectory which was going on, where we saw a direct use case in the financial field. I would like to mention another aspect which is very important for us and which has more to do with the real economy. We as a public authority must of course be very careful in how we spend public resources. And cryptocurrencies are nice and exciting from a technological perspective. Bitcoin and all the alternatives, I mean, it's a fascinating topic in itself. I would say, use cases for the larger public, for the citizens, for the SMEs, at least at the beginning, were limited. We see the application of distributed ledger technologies, blockchain, more in the real economy. Because blockchain is much more than just any technology that now helps to digitize financial markets. It does that, but it does much more, because it creates a decentralized trust network. It turns the internet of information into the internet of value. It has a really more far-reaching component than just this alternative finance aspect. And in 2015, we had a very interesting exercise that replies to your question on the timing. In 2015, President Juncker became the president of the European Commission, and he asked all the Commission staff, what should be the future innovation priorities of Europe? So think carte blanche in a very broad sense of what should Europe really focus on. I proposed at that time blockchain, but I didn't propose it for cryptocurrencies. I proposed it for real economy applications, for the token economy. And in 2016, when we published our results, blockchain was one of the 4 key breakthrough technologies on which Europe should focus its future innovation activities in all policy fields. This is an enormous game changer in terms of mentality and agenda setting. And since 2016, we have really worked very concretely on implementing this agenda with the FinTech task force, with the MiCA regulation, with many other things, and now turn this also into all the real economy applications. So I would say we have this track record, and this track record enables us to do things like MiCA, which are indeed at a late stage of the trajectory. It's not the beginning, it's already very advanced, I would say, in terms of design.
That's actually one of the most asked questions. When will MiCA come into force? I don't know if you have any update on in that respect.
Yes. What I can say is that MiCA is hopefully in the very final discussions. We had the proposal of the European Commission in the autumn of 2020. We then had the normal discussions in the European Parliament and the Council. The Council has made its decision. The Parliament is also concluding its opinions, and now we have the final discussions in what we call the trilogue. So we hope, but this is no guarantee, of course, that we can be within a short, hopefully very short time frame at the concluding moment. I can, of course, not comment on the detailed changes and amendments, because the Commission made its proposal, to which I stick, and which is what I also represent, because I think it is, in my opinion, the best way forward. It is logical in a political process that many sides come with alternative ideas. Some of them might be better than others, but that's not for me to comment upon. I have the impression that there is a big move now towards coming to a conclusion that might lead us to an adoption finally of the MiCA regulation, perhaps in the course of this year, but I must stick to the official timeline that we have it in place by 2024, hopefully significantly earlier, and I think that progress at the moment is going well.
You mentioned that you created, or at least talked about the token economy. You wanted to use that technology not only for the finance world, but also for the real world. And Liechtenstein founded the work group to think about the local regulation in 2016.
Yes.
And it was actually quite a similar process. The starting point was also where could this technology being used in our financial markets. And then actually ended up with also the vision of the token economy, developing a blueprint for the token economy, which we call token or TVTG or Blockchain Act, which is now in force since 1st of January 2020, which allows you to tokenize assets and define service providers. So it seems like that, and that was actually for me I was very happy to see that the European Commission with the MiCA draft in September had similar, or at least a similar concept of crypto assets, and differentiate these assets from the financial instruments we already have covered with the other regulations like MiFID. Because like back then, we had the discussion, maybe it would be a good idea to just say every crypto asset is a financial instrument, and therefore all of the financial market laws are applicable, right? And for me, that was really good to see that the European Commission follows a similar approach there. That's what people sometimes forget about, is that it's not only MiCA. With the proposals, with this digital finance package, you also released this DLT MTF pilot regime. So you cover also the secondary market and specifically for securitized financial instruments or security tokens also, so to say. So how did you experience this development of Liechtenstein, with the announcement? Did you hear about it, or when did you hear the first time about it? Was it something you had a look at and say it's interesting that Liechtenstein is not a member state of the European Union, but we are a member state of the European Economic Area? What our proposal would look like?
The dialogue, Thomas, has been there more or less from the first day. And what I find interesting, and that guides me in my analysis, is from an economic history perspective, that you need to see where are the sources of true innovation. And when you have central entities or big countries or groups of countries, like for example, Europe in the past, the European Union now, you see that most innovation very often comes from smaller places, with all due respect, I would say, at the borders. When you look back in history, 500 years, you see that when Europe reached out into the world with the first wave of globalization, I'm not taking normative statements here, that this came from Portugal and the Netherlands with two very different business models, if I am to call them that way. In the crypto space, we see that a lot of innovation obviously comes from places like Liechtenstein, Switzerland, but also other parts of the world. And of course, from the very first day, we took very close note of that. But as said, we had our own agenda, and a very nice coincidence is that the two agendas fitted in very well. And I think that Liechtenstein at that time was able to go a bit further than we could, because we, of course, came from this history of the banking crisis, stabilizing the sector, having a huge legacy system, having 28, now 27 countries that we needed to coordinate, etc. Where it is very difficult, I would say, to come to the radical approaches that actually a technology like blockchain needs, because this is a truly radical technology on democratization, on inclusiveness, on all the elements that are important to us. And in a sense that Liechtenstein, as an economy that is very integrated in terms also of the industrial core, you have 42% of industry, of your value added, of the financial sector, of the short distances between the policy field, the regulators, the decision makers in the economy, etc. You had a very good situation in being very innovative, and you took this very much into account.
And you visited some of these industry players.
I visited a lot of places. I went here regularly. I find it extremely important to go to places and see, because the benefits of blockchain, like with any other technology, can only be explored if you talk to the people in the companies, if you work on use cases, if you really see where the issues are, the opportunities, the bottlenecks, etc. Because then you also learn to balance between all these vague risks, of which we see so many papers published, in what all can go wrong and where you see the really benefits on the ground. And what is interesting to see is when you see that the token law of Liechtenstein and our MiCA regulation, that there's actually a very significant complementarity between the two. There are certain elements on service providers where, for example, your token law, like on the physical validator and other things, go further than we do. There are other things that we regulate more than you do. But in essence, the philosophy is very similar. Where you go further, and I like that, is that you still take tokenization to a more abstract level, and I think you need to do that. We had the history, as said, that we came from the financial area. So in a sense, MiCA was always designed as a part of financial regulation. And in my opinion, that of course makes sense, but tokenization is much more than only the financial aspect. At the end of the day, we are talking here about code. We're talking about a complete mingling between financial and real economy points, between economic, legal, IT aspects. All of that comes in a fusion together in what we call the tokenization. And at the end of the day, a token is just a container. A token is something that can be coded, can be digitized, and how you should treat a token from a regulatory perspective needs to depend on what you do with the token. And therefore, a token should not primarily be seen as a financial instrument or as a crypto asset or whatever. Because when you go to your bank and, for example, you are an investor, you have a share in a company and you can get your dividends, or when you have bonds and you get your interest rate. This is an automated, very well structured, packaged process where basically you sit in your chair and don't do anything. When you have a token, you have a much bigger spectrum of rights. You cannot do anything. You can mess up your key and don't find it any longer. You can use it or not use it. You can be flexible, etc. This requires a different regulatory approach. And therefore, it's as a starting point nice to have it as a sort of financial regulation, but then in a very liberal way. And this is what we try to do with MiCA. If you read MiCA correctly and disregard that it is 170 pages and a lot of technical language, in the essence, the first two of the three pillars of MiCA are very liberal approaches to financial market regulation, which indeed reflect the nature of tokens.
And you could also, you could potentially issue Bitcoin another time. I mean, you don't issue it, but you can start another Bitcoin protocol, Bitcoin-alike protocol, with a really, like, there will be almost no regulation in place, even if MiCA is there. And I think that's groundbreaking, right? Because if you analyze what happened with that protocol, where is the need for regulation there? And I think that's a really very good regulatory approach. And I know that people are sometimes really thinking of that MiCA is in general quite bad, but as you said, you have to analyze it in depth. And I think, as you said, that the main pillars are really great.
You need to see from where MiCA comes from, not only from the background that I've just mentioned, but also the political context in the summer of 2018 when we started creating this. And what was even the summer of 2019, we were faster than I thought. We had at this time only two elements.
So that was 1 year, sorry. That was in summer 2019 you started?
And we took 9 months and we had a 3 months consultation period. So basically we pushed it through in record time. But we could only do that because we were so well prepared. And the context at that time, that beyond Bitcoin, for most people at that time, crypto was still Bitcoin, but it was a second thing. It was Libra. And we got a huge political discussion in this summer that we should prohibit Libra. And I can speak about that because it is in the public domain. I mean, we got letters from key European governments telling us very clearly, you should prohibit all private stablecoins. And we as the Commission said, we do not do that. We take a risk-based approach, but we prohibit nothing. We lay out the rules under which stablecoins can operate. And for example, when you would like to operate a private stablecoin, and when you would like to ensure the functionalities, that you have a certain reserve, to me is common sense. I mean, therefore, there are other elements, of course, as well. And therefore, the third and big pillar on e-money tokens, stablecoins, etc., in MiCA is a rather traditional financial market approach, but an approach that allows for everything if the conditions are met. We prohibit nothing. The first two pillars of MiCA are different. The first pillar actually is Article 4, which is the exemptions. And what you just mentioned on the crypto mining, for example, Bitcoin, but also potentially other things, these are exempted, like other things as well. We say that you do not need regulation for that. That is our proposal. And what many people do not understand is that a lack of regulation is not the same as a lack of rules. Of course, you fall back to other rules. You fall back on civil law, you fall back on other things. If you go more into the financial instruments investment space, it is important to have consumer protection, but it's also important to have the protection for the person that launches the project. Because if you, for example, collect money and you fall under civil law and not financial regulation, you are in a bad situation because the rules are very negative towards. So there can be advantages and disadvantages. But the first pillar is a huge set of exemptions. And the second pillar, which is mostly related to, for example, utility tokens and all the other things that are not hardcore financial instruments, is a very light regime where we say that publish a white paper or send the white paper to your regulator, your national regulator. It's not even a prospectus, it is a white paper. And then you can launch your project. You even do not have to wait for approval. I mean, if that is not liberal, I do not know what liberal is, because it means this approval means at the same time that you have a European passport, that you can launch your project in the EIA. And the burden of proof is on the regulator and not on you to demonstrate that there is a problem with this. And I think that this turns it really from the head to the feet where it belongs, so that the risk assessment is seriously with the regulator and not just a washing list of 50 things that could go wrong and you have to tick the boxes.
Yes, and with that white paper, I think in the proposal it also states that you have to provide arguments why it's not a financial instrument, why it's not e-money, and it doesn't fall under the banking laws, right? In general. And you briefly touched, and you said that before, that Liechtenstein went way further with our local law, and we were able to do that because we also were able to amend our civil law. And this, I think, is very crucial for have these enforceable claims, right? If you have digital transactions, it's one thing that you have the supervisory or the regulatory part of it, right? What you're allowed to do, which licenses you have to provide services in that area. But I think the second angle there is that you also have to have a suitable civil law framework, or actually at least a framework which ensures that if you transfer something in the digital space, that it's reflected in our real world. We call it, or I call it, the token container model actually. But we have this Article 7 that when you dispose over a token, also the represented right is transferred. And that is crucial to get this legal certainty. And you mentioned also briefly before that one big topic everybody's talking about now is NFTs. I think that's already almost over. Seems like it's quite an old topic in the sense of blockchain or in the speed of blockchain. But if you now see what is happening, we have blockchain, we have something like, we really have this legal certainty that you're able to have a digital thing you can easily transfer, which actually have some connection to the real world. And now you have like technologies like virtual reality, you have the Metaverse discussion, you have artificial intelligence, that's a separate topic, I think. But if you put all of these things together, I think, for example, if you have a space and then you can say, I have in my space, I have an NFT, and that's why I'm the owner of that NFT. These things come together. And I think that there's now a momentum where you see that these technologies, they just come together in one area. And what is your perspective on that? What we will see like the next years? And is the European Union prepared for that? Is there some laws, or do you think about regulation, or what is needed, or new regulatory approaches for this completely virtual world?
You very well summarized the speed of innovation, which has been in the crypto space from day one and which is accelerating. And you must see, for example, when we published the draft MiCA regulation, and I come to your other point in a second, about 1.5 years ago, that since then we had discussions on DeFi, which was just in its infancy at the time. We had then the NFT discussion, which now looks relatively old. We have the Metaverse, we have Internet 3.0, we have all the things coming up. And of course, regulation, in my opinion, only makes sense anymore in this space when it is of a flexible, fluid nature. You do not have the time to regulate ex ante and see what can all happen, and then you regulate it like with a mature market. You have here very fluid and innovative market. So you need to set certain principles and you have to accommodate for that. And you will see when the final version of the MiCA regulation, for example, will come out, that of course there has been an attempt made to take into account things like DAOs or DeFi elements, etc., which haven't simply not been on the radar that much when we designed the thing, but we need to go to the flow. Now there comes a further acceleration in this process to the Metaverse. And I think that the Metaverse is really probably the biggest step forward since we have seen the emergence of the first cryptocurrencies, in a sense that now all the elements that have started bringing our physical and the virtual world together will more and more come together. And what this requires is a new language, or is a new understanding of the basic principles. And this is something which is extremely difficult to learn for economists or lawyers or programmers that have been living in their professional silos in the past, because at the end of the day, for the metaverse, for the crypto space, when it is lines of code, they do not care whether you are an economist or lawyer, etc. It has to work. You are sitting here, Thomas. If I take a photo of you as Thomas and I rearrange the pixels, I have the same pixels, but it is not Thomas anymore. It's not your digital representation, but it is something different. But I would say, is it something that can be turned again into Thomas or not? This is what code is. It is zeros and ones. It is certain abbreviations. It is certain symbols, etc. And you have to understand that the function of what a line of code or a very similar line of code has can be something different. It can be an order, turn off the camera. It can be 10 Swiss francs worth of value. It can be something completely different. It can be nothing. You do not see that from the code. And this is what you need to understand, basically, that when you now have some representation in a digital or virtual world, it is not that you can say, this is a financial instrument, this is not a financial instrument, this is a utility token or what. It depends on how these things is moving on, what the context is, what you do with it. And this requires a much greater, I would say, flexibility in the approach that we take in governing these things. Also because these things will have more and more repercussions between the virtual and the real world. And this is also a sort of danger. I mean, we have come very far in developing now the first elements of the token economy. In Liechtenstein, you are very advanced. In Europe, we are also relatively advanced, especially compared to other parts of the world. And we are very advanced in terms of a decentralized, bottom-up democratic approach on this. But there is a huge pressure now coming, for example, from the big techs investing hundreds of billions of dollars into the development of the metaverse, from autocratic societies that want to control their people with artificial intelligence and also with the crypto space, etc. Also from a certain arrogance that I see in parts of the DeFi world, where they think that we're living on a different planet, we have nothing to do with the real world here. Everyone again is trying to do their own business, is trying to turn this decentralized open space into something closed or into something that is only for some people or organizations, which it is not. And I feel that we need to come as a society, as democracies, as countries, and the notion of country will blur in the digital space in the future, we know that, be very important to discuss now the value set, the fundamental principles, how we govern these things. And this is much more than just continuing a line of regulation that we had 30, 40 years, and now we make an extra regulation. MiCA is not about just an extra regulation. And you mentioned the context rightly. MiCA is part of a digital finance package that also includes the regulatory sandbox, but it also includes work on the digital euro. It also includes work on inclusive payment systems, etc. It has many, many facets that are to provide services. But at the end of the day, in the token economy, these services will be completely integrated into value chain management, into sourcing of inputs, into production purpose, into IP management, into everything. And it will require a new language. And this language will be code. And therefore, I think civil law principles are the best basis in order to develop this approach, because, as you know much better than I do, we have a continental civil law culture which exactly does that. At the end of the day, we have a certain flexibility where we set, I would say, limits to developments. And then we try to find resolution mechanisms if there are certain conflicts, and we have to work on decentralized structures to do that. I'm very happy to see that in many DAOs, this is already going on in terms of voting mechanisms, governance discussions, etc. Because perhaps last point on this, because I'm getting slightly abstract, but legally it might be a valid point. I feel that in the future, the responsibility in the crypto space lies with communities. It does not lie anymore with the individual. We have a tradition, especially in economic theory, that we look at the individual as a starting point, and individual maximizes its utility, companies maximize their profit. This is not the world. An individual or an enterprise only has an existence as a part of a community. And this means that when you enter a space where the community plays a role, like in decentralized, trustworthy systems, like we have on DLT, that then you cannot just put someone by the hair and say that we know by chance where you live and what your name is, so we put the responsibility on you. You are the one to blame. The individual is not to blame any longer. It's the community. And this is what you know when you enter the space. So that creates a huge challenge towards the traditional regulatory model, because that is a complete change towards what we have now.
Yeah, because it's way more easy to create spaces, communities, DAOs. It's, as you said, it's not like the limitations of your country borders anymore, where you say, okay, if I want to found an entity, I have to do it based on this law and then have to follow the principles. You can, it's within seconds, you can create your own space. You can invite people from all over the place. You can then share your thoughts. You can define a strategy together, and then you can say, like, let's do that together. We as a community want to do that. And I think what I see is this virtual reality world some years ago was, that was like a game to play, right? It was interesting to see and where this road could actually end up. But if you try that today, and if you go into such a space, and if you see how the development or where we are now, and when you anticipate where we may be ending up, that's fascinating. I totally want to say that it's fascinating, but in some respects, I totally agree. It's a big challenge for our society to deal with the challenges we have there. Thank you very much for stopping by. I have one final question, and I asked it every of my guests, and I want to ask you that question as well. What is your favorite coffee, Joachim?
My favorite coffee, apart from the one that you served me kindly before we started talking, I am a very traditional person. So I talk a lot about digitalization, about crypto, about all the advanced technologies, and I really like them. I see a huge role in that. In my normal life, I'm a very, say, traditional person, and so is my coffee. Mm-hmm. So I take a hand filter.
Okay.
I take a lovely big cup. Mm-hmm. I have, and I must say that now, and I apologize for that, but it is, in my opinion, the best coffee. It is called Douwe Egberts, which is a Dutch brand, and I use the dessert version of Douwe Egberts. Okay. You take 3 full tablespoons of that, put that in your filter, and with a lot of love and a very fluid movement, accompanied with some nice thoughts about what you will have in a few seconds, you just boil your coffee, and then you enjoy it with a little bit of milk, so that your coffee is just not black anymore, but very dark brown. Okay. This is my favorite coffee. I have it 3 times a day. Okay. And this is probably one of the key reasons, actually, why I have the energy to drive forward the token economy in Europe. So coffee is a very important point, and this is why I thank you very much for having been part today of your coffee talks. Thank you very much. That's actually, I think that blockchain and coffee has quite something in common, and I always tell people, yes, that the reason why we are all able to do all of that is also coffee. So it's interesting that it helps you as well. Thank you very much for your time. I know that you're very busy. You have a tight schedule today. Yes. Thank you for stopping by. We have, I think, a lot of topics, so we could fill other discussions. We have DAOs. We have a lot of things to do in the future. I hope that you visit Liechtenstein soon again, and hope to see you soon, and all the energy you need to be successful in whatever you do. And it's great to see that we have somebody in the European Commission who shares that idea. Thank you so much, Thomas, to you and also to your colleagues for all the important work in the last years. And I'm certainly very happy to continue our very good discussions. And I'm looking forward to the next discussion. Thank you. Thank you.